Hey everybody, it's me, CNB, and today I am back with another ASMR video. Today I wanted to bring you guys a little bit of a stock portfolio update. I woke up a little late today, and I usually do this, early in the morning when, I'm drinking my coffee, which I am still drinking my coffee, but I'm a little bit behind schedule, and it's been a while since I've done a stock market update, stock portfolio update for you guys, so I figured, why not do one for you. Now, before I get into this video, I want to say, guys, I have been very, very, very interested in the stock market as of late. Obviously, I sold my house. I took that money and I kind of have been dollar cost averaging into the market over the last, 3-4 months, and still got a lot of cash on hand. But, what would you guys think about me starting a finance channel, like a stock market finance channel, separate from this channel, non-ASMR, just strictly finance, where we talk about, I would do like one video a week. Mondays, the lawn crew, the lawn maintenance crew is here, and it's very loud outside, and so I can't really do anything ASMR related on Mondays. So I was thinking I would dedicate that to a finance channel. So let me know in the comment section down below if you think that's a W idea, if that's an L idea, if that's a waste of time. Let me know. I feel like finance is something that's very popular on YouTube, but not a lot of creators do it very well. You got your Andre Chicks, you got your Graham Steffens, you've got a lot of different stock market channels that do it well, but outside of like a handful, I don't see very many, and I feel like there's a lot of demand for that. So let me know in the comment section if you would be supportive of such a venture. But guys, let's take a look at what I've been doing. So before I show you anything, guys, this number that you're about to see, listen, this is a number that I have been saving for years and years and years and years and years. Not only that, I was one of the lucky ones. I bought my house in 2018, and I sold it in 2022, making a massive profit off of that. I don't want you guys to see this number and think, oh my god, CNB is rich, CNB has so much money. All of this is invested, meaning it's not liquid. Could I sell all this stuff? Could I sell all my stocks and have it be liquid? Yes. Do I want to do that? Absolutely not. So I want you guys to know that going in. So, as far as like week-to-week basis goes, I am very cash poor. I do this full time, and it's very fulfilling, but it doesn't make as much money as a 9-to-5, traditional 9-to-5 would. I'm okay. I'm doing fine for myself, but I just want you guys to, I don't want you guys to think that I'm this big rich YouTuber, because that's not the case. But that being said, here is my Google Finance portfolio. Now, I love Google Finance. I just discovered Google Finance like today, or actually not today, like the last couple of weeks. Let me actually pull up my real portfolio and see if this is okay. I think it's up to date. Wait, maybe not. I think I may have made a purchase before, purchase recently, and forgot to update my my Google Finance, because it doesn't do it automatically, unfortunately. But that's okay. It's a little bit out of date, but not by much. I haven't made any major purchases lately. So, as you can see, today, look at this. I don't know what's going on today. I think inflation numbers came in higher than expected, which doesn't reflect this price movement or these gains at least. But I have a little bit of a prediction as to what's going to happen moving forward for the rest of 2022 and going into 2023. Also, disclaimer, I'm not a financial advisor, not a professional, so this is all entertainment purposes, yada yada yada. I do, however, have an accounting and finance degree, so I know what I'm talking about, but I'm not a professional. I just want that to be completely clear. So, one thing that I saw recently was Pepsi. Pepsi announced a earnings beat 2 days ago. Let's see, we can go back and actually see on the chart. That's like a $6 jump for Pepsi. It's up $9.84 in the last 5 days. It's a really good jump. I just recently got into Pepsi. 15 shares, nothing crazy. Just 15 shares, and I'm happy with it so far. 2.66% dividend yield. I have been investing heavily into dividend stocks. The only purchase I believe that I've made outside of dividend stocks has been Google, and we'll go over that here in a little bit. But today, like I said, last 5 days up $9.77. Kraft Heinz. Wait a minute. How can I go? Okay, there we go. Kraft Heinz. Did it not just say it was up 7%? Wait, maybe it was up 7%. Oh, it was up 7% in the last 5 days. Okay, so this changes based on. Gotcha. I thought that was up 7% today. I was like, what the heck? Kraft Heinz is something that I don't have any equity in, but seems to be doing well. Again, Kraft Heinz in the same boat as Pepsi. Still a haven as consumer staples stumble, says Goldman. Consumer staples stumble. Yeah, okay, so that's what I was kind of getting into. So you see Kraft, you see Pepsi. I wonder how Coke is doing. All these retail consumer goods doing well, which is interesting because of inflation. Inflation being so high means your dollar is worth less, which means you don't have as much money to spend on groceries, stuff like this. And it's interesting. Let's see what Coca-Cola is at. Let's see what Coca-Cola is doing. Yep. It's a little sideways. Again, if you zoom it out, if you zoom out the chart, everything looks like this. Everything looks like this. Everything looks terrible. Red. But here's the thing. You buy a company because, me personally, my strategy is you buy a company and you buy you buy into it for 10 years. Like these, my portfolio is something that I want to hold on to for the rest of my life, really. It's currently producing about $500 a quarter in just straight dividends, which I am reinvesting, but $500 a quarter, that's an extra $500 every 3 months that I have just for holding the stocks that I'm holding, which I think is incredible. I think that is a strategy that I can absolutely get behind. It makes it fun. It makes it fun for me, having these growth stocks. If, for instance, if I have a dividend stock that's down 20% since I bought it, 10% since I bought it, I'm going to worry about that way less than a growth stock that's down 8%, we'll say, because I'm still getting paid for holding the stock. Now, am I saying that I don't invest in growth stocks at all? Absolutely not. We can go and see. I have Meta. I have a couple shares of Meta, 15 shares of Meta. I have, what else do I have? What else do we have? Go back into my TD Ameritrade. I have, where is it? Google. I bought a ton of Google right at $100, and when I say a ton, I mean a ton. I took a big buy on Google. I bought 100 shares right at $100 for the most part. I think it was at like $101. I'm a big believer in Google. Obviously, being on the YouTube platform, I am a huge believer in Google. I would say if it drops to 90, I'll buy more. And you know, every $10 it drops, I'll buy more. I don't see it dropping too much more. By and large, this is what I see happening. I see the market having a fourth quarter rally. It's earnings seasons. It's earnings season for a lot of stocks right now, and like Pepsi, like Kraft Heinz, I could see a lot of people reporting beats, which is going to be good for the short term. However, if we don't get inflation under control, which we have been trying to do for some time now, if we don't get inflation under control, that is going to have an adverse effect on everything. So it's all good. It's all fun and games. Here's Snowflake. Another growth stock that I'm pretty heavily in. It's probably about time to buy more. To be honest, I'm down 10%. Snowflake drops as Bernstein starts coverage. It says gaining share will be difficult. White Twilio, Snowflake, and Appian shares plunged today. The Motley Fool, I don't read too much into the Motley Fool. They kind of feel very scammy, very persuaded by the companies that they're in. I feel like they have ulterior motives, the Motley Fool. But Snowflake is another growth stock that I'm very interested in. But by and large, I'm still holding. For those of you that saw my last update, let's see, value, there we go. OUSA, BTI, SPY, VOO, VYM, and QQQ are my 6 highest holdings. These are all broad spectrum ETFs. OUSA pays me monthly dividends, not quarterly, monthly dividends, which is why I'm so heavily invested in OUSA. It's also Kevin O'Leary's dividend ETF that he controls. I'm down pretty heavily. I've been in OUSA for the longest. I was in OUSA before I sold my house. All these others I bought into after I sold my house. I wanted my home equity, it was the most money that I've ever seen in my life. And I wanted it to be in a safer investment, which is definitely more broad spectrum ETFs. You don't want to take, what is this? Almost $100,000, over $100,000 probably. No, 1, 2, 3, 4, 5. Yeah, it's not quite $100,000. I did invest a little bit into OUSA as well, but you don't want to take all of this money and plop it into some speculative stock like Tesla. You don't want to YOLO all your money into one stock. You want to spread it out, and that's what I did, and that's what I'm going to continue to do as the market drops lower. Now, one thing that I wanted to do on potentially a finance channel, and this is something that I've never seen before, I want to do a video series where I take the ad revenue that I make from a video, and this would require me being monetized, of course, which is kind of why I wanted to make this video. I wanted to see just how much interest you guys would have in a finance channel, and maybe I'll set it up. And let you guys subscribe, but I wanted to gauge how much interest I could get off of my ASMR channel over to a finance channel, so we could quickly get that monetization, because it's really hard to get monetized, guys. It's really difficult. It takes a lot of subscribers, a lot of watch hours, and I kind of wanted to just run that idea by you guys. But what else do we have? Chevron's been killing it lately. Chevron is my oil play, 3.46% dividend yield, and I'll show you guys my dividend spreadsheet here in a minute. After we go through all of the rest of these, I just want to see. Actually, hold on, let's go back. Live update stock sync after an annual inflation measures returns to 40-year high. See, it doesn't matter at the end of the day. At the end of the day, it doesn't matter how many companies have great earnings. A 40-year high on inflation will be terrible, 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 terrible. Not good, not good, not good. But we got J.P. Morgan announcing earnings tomorrow. We got Johnson & Johnson announcing on the 18th. Goldman Sachs on the 18th. Procter & Gamble on the 19th. Abbott on the 19th. And yours truly, Google, on the 25th. Based on your watch list. I do have a watch list as well. This is kind of where I've placed all the stuff that I don't own. We'll take Pepsi off because I did buy Pepsi. Kroger, Amazon, WB Carey is an interesting one. This is a real estate REIT, and look at that. Oh man, it has been beat up in the last month. Just absolutely demolished. It does have a 6% dividend yield. This is a real estate REIT. I'm not exactly sure what space they're in. I just saw where a lot of people, a lot of dividend investors were talking about WB Carey heavily, so I wanted to put it on my watch list. Dips more than broader markets. Well, you should know. I keep on buying these two picks. Again, Seeking Alpha is another one that's a little strange. Let's read. Yahoo News, I would trust. Let's see. This move logged SP 500's daily loss of 0.75%. This move lagged. Sorry. Prior to today's trading series, uses the real estate investments and trust and lost 17.27% over the past month. Okay. So it's done worse. It's done worse than, the base market. Anyways. Can I go back? How do I go back without actually going back? Okay, whatever. Oh. That's why. It wasn't an actual, it opened up a new tab for me. Okay. But what else does Google Finance do? Oh, you can track your crypto. Now my crypto looks like trash because I've done a lot of I keep my crypto I treat my crypto very liquid. I buy and sell, and I used to have Bitcoin, now I don't have any Bitcoin. I don't really pay too much attention to my crypto. It's just kind of where I have my I just put it there because it's nice to see it all in one place. I have multiple different exchanges, multiple different wallets that have crypto in them, so it's nice to have a lump sum area that tracks everything. But Microsoft, what is going on with Microsoft? They have a little logo by their name. Microsoft launches Designer, its answer to highly valued startup Canva. Launches Designer, okay. I like the name at least. Again, everything on my watch list, everything that I own, has been absolutely hammered year to date. 30% year to date. Microsoft. I was watching a channel, I don't remember who it was, but basically they said that they invest in companies with 10 years in mind. Do you see the company being there 10 years from now? And some, they say, oh, they wouldn't be super surprised. I mean, they don't think it'll happen. If some of these Magnite and Fluent and Fastly, some of these speculative stocks, oh, they might not be around in 10 years. you're still investing in them. You still believe in them, but you wouldn't be surprised. You know, things happen, guys. Companies go under all the time, and so you gotta be careful about where you put your money. Heck, I've seen where people don't even believe in Uber anymore. A lot of people don't believe in Uber. I do, but a lot of people don't. It definitely has its problems. It has its flaws, but I believe in Uber still, which is why I have money in it. But could it be around in 10 years? Maybe not. Will Microsoft be around in 10 years? Probably. Again, like, if Microsoft isn't, I think he said, the exact thing he said was, if Microsoft isn't around in 10 years, then there's something crazy going on in the world. There's something, we got bigger fish to fry if Microsoft isn't around in 10 years. Same with the likes of, like, Apple, or, you know, oh, jeez, Target, Walmart, you know, stuff like that. JP Morgan, how long has JP Morgan been in business? Does it say? Man, they're killing it today. Up 4.3% today. Again, 3.7% dividend yield. PE ratio of 8.67. This is actually a very solid value. But if you go and look at the year to date, I mean, just absolutely demolished. Everything. Now is a great time to buy. Am I saying we're at the bottom? Absolutely not. We could be. We might be down. We might be in for a fourth quarter rally, and then more bearish markets for 2023. I don't know. That was kind of the reason behind my Google play. Go back to Google. I bought. Where is it? I bought, again, 100 shares of Google at $100. It was about $10,000 worth of Google. And this was my fourth quarter rally play. Basically, I was able to justify this decision as I like the price now. It's at $100. I'll buy it at $100. If we get a fourth quarter rally, then boom, we could see. Let's see what was. I mean, we could see prices go back to, like, you know, 130, 120, 130. I'd say. I mean, August prices, it was just 122 in August. I mean, we could see it go back to in the 120s and the 130s. We get that fourth quarter rally, boom, all of a sudden I've made 30%, 20%, 30% on a stock that's down 31% year to date. So that was kind of the thought process. And then on second thought, if it keeps dropping, who cares? Who cares? I have 100 shares of Google. That is a stock that is not going anywhere anytime soon. It will be more than $100 down the road. It's just a matter of time. They say, I think it's, don't time the market. It's not about timing the market. It's about time in the market. And that is 100% true. And that theory, that saying, is being tested very heavily today, with how much everything is down. A lot of people are probably panicking. Guys, now is not the time to panic. Now is the time to buy more. In my opinion. Again, not a professional, but do I think we are in a bear market for the next, on past the fourth quarter? I think so, unless we get inflation under control. I think so. But, I mean, this, obviously, today is looking really good. Wish. Good old Wish. Man, this thing is, I'm just going to take it all the way to the ground. If you didn't believe me when I said I'm not a professional, well, here you go. Now you can believe me. I'm not a professional. No, a professional would have never let a stock, let themselves lose 85% on a stock. That would have never happened, but it happened. Anyways, guys, that is going to do it for this video. Actually, give me 1 second. I need to prepare something, and I want to show you on my little spreadsheet of dividends. So, 1 second. Okay, so here is my dividend spreadsheet. This is just a basic Google spreadsheet that I have done manually. It's not automated, it's not automatic. And I wanted to actually double check and see if it was up to date, and it actually wasn't. Microsoft has actually raised their dividend from 62 cents a share to 68 cents a share, which is actually going to give us about an extra $1 every quarter. I know, that sounds so small, but imagine if you had 10,000 shares of Microsoft instead of 10. All of a sudden you're making a lot more money just off of that teeny tiny little increase. But let me explain this spreadsheet for you guys. So in the far left column, I have my assets. So that's Walmart, VYM, VTI, VOO, Target, SPY, QQQ, Pepsi, OUSA, Microsoft, JP Morgan, Johnson & Johnson, Chevron, Cat, and Apple. All of these stocks pay either quarterly or monthly dividends. All of them but OUSA pay quarterly. But in the second column, we have how much of each stock I own. So I have 24.059 shares of Walmart. And then to the right of that is how much money that is, how much money they pay per quarter. I should flip these two. The dividend per share should go here, and then the calculations should go here. That's why it's a little bit confusing. It was built wrong by me, but how about this? If we share the fifth column first, dividend per share. Walmart pays a 56 cents dividend per share. So you take the number of stocks divided by how much, or multiplied by how much they pay per share, and that gives you $13.47 per quarter. Divide that by 3, you have $4.49 per month. Now, I did that for every single one of my stocks, and as you can see, I'm making just over $500 a quarter off of dividends, over $100 a month off of dividends. And this is actually on the conservative side. Some of these ETFs, for instance, VYM has, in my spreadsheet, a dividend per share of 0.65. But if we go and look it up, let me get a live look up here. It's actually paid in September. It paid 76 cents per share. So an extra 11 cents per share on VYM turns our, let's see, it's 0.767, turns our $105 for the quarter into $124 for the quarter. So that, you can kind of notice a little bit difference. I do have a lot more money in VYM than I do Microsoft. So that is quite the difference. What was it? 0.767 raises our dividends per the quarter for $19. $19. If I updated VTI, let's see what VTI is. Again, I went lowball on all of these dividends per quarter. We got 0.795. Let's do 0.795 here. It's going to take our dividends per quarter from 65.28 to 79.84. Now we're up to $534 a quarter. So this is why I love dividends. You invest in them. You invest in the company. The company goes up. The company goes down. Hopefully, you hope that the company goes up. But even if it goes down, you're still getting paid dividends, which is going to then bring the average price per share of what you own down if you reinvest the dividends, of course. And that creates a dividend snowball, which I kind of want to talk about as a first video over on my second channel, or over on my new finance channel, which based on how much feedback I get from you guys, I may or may not end up creating. So that is going to do it for this video. Leave a like, comment, subscribe. I'll see you in the next one. Peace, peace, peace.